And it's important to understand because now everyone's criticizing the Fed. Right, we look at 11 losses in 12 weeks, and the Fed was so behind. And then what did the Fed do? They raised by 75 basis points. We saw the market rise yesterday. Now we're seeing it crash. I'm doing this at 9:45. We're opened up over 2.5% low in the S&P and the NASDAQ. Sell-off. But they're doubting the credibility of the Fed because they said, well, we're not even thinking about 75 basis point hikes. Even I said, why do it again? Why not? Why take that off the table? But now the Fed is looking at the data and adjusting. And that I give them credit for. And you're going to have the naysayers, and it's so easy to just rail on the Fed. I know the Fed sucks. They don't know what they're doing. They cause this whole thing. Holy shit, whatever. I mean, it's our politicians that really caused it. Just, the trillions and trillions and trillions in spending. I mean, the Buy Back Better bill didn't even go out, and they were pushing that. Thank Joe Manchin for that. I mean, if he voted for that, they pushed that through. Holy shit. That's more trillions of dollars going to bullshit projects to people that voted for the current party. And it doesn't matter, even if it's Trump or whatever. I'm not destroying the party. I'm just saying, holy cow, if they passed that. Thank God they didn't. If you look at a 75 basis point, I give the Fed credit saying, okay, you got to look at the data. If there's anything that you've learned over decades and decades, it's let the data dictate where you're going. You got to be careful of perma bulls or perma bears, and all perma bears are finally, after 12 years, they're on their perch. I'm the greatest. I told you about inflation. Well, you told us about inflation since the 70s and 80s. For the last 12 years, you revised your crash books and shit and destroyed everyone. And you told us to buy gold for 12 years where the market outperformed by 5-1. Now they're right. They're on that perch. That's fine. But it's very dangerous to follow that. And also perma bulls, which you're seeing throughout the market. The Tom Lees and stuff like that. No matter what happened, bullish, 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 bullish. You look like a genius until you don't. Because the last 5 times they had him on TV over the past 3 months that I saw, he's been incredibly bullish. Got to buy. See the bottom here. Bitcoin going over 100,000. All this shit. Again, I think Bitcoin is going to go over 100,000. I don't know if it's probably not going to happen. It's definitely not going to happen this year. It's not going to happen next year, but it will with institutional money flowing in, and that's real. When it comes to crypto, Bitcoin's not bullshit. Ethereum's not bullshit. The ones in our portfolio are not bullshit. But 90% been very, 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 very clear on that point. Analyzing thousands of these where you can't even see their cash balance and all this shit. Again, I'll cover that in a second. Saying 78, at least 75, 80%, sometimes even higher. The industry is total fucking bullshit. And you need to get a lot of that out of the market, which you're seeing, especially with this deleveraging process. But what happened? What happened over the past few days? Let's talk about it. Okay, obviously the Fed, they're in that quiet period. They leaked it out. It was going to be 75 basis points to the Wall Street Journal. Good job for them. Wall Street Journal published they're probably going to raise 75. Everybody, all the firms, upgraded it. Goldman Sachs and others were pricing in a 75 basis point, like a day before, which is meaningless. So good job by the Fed leaking that out. And then bonds started to surge. That's the bond yields. The 10 years now at 3.4%. So it's over 10% since Friday. In the bond market, that's like the Dow or the S&P 500 falling 5% over the same time frame. It's insane. It's an insane move. Something you don't see. Something you rarely see. As you know, bonds, the yields trade inversely to prices. So that rise over 10% translate into a 10% plus decline in bonds, the price of a 30-year treasury. But with rates surging, what do we have here? I mean, the 30-year mortgage, right? So you're looking at a mortgage rate 6.3%. It's insane. You want to see how insane that is? Do this when you have 5 minutes. Go to one of the calculators, just put up mortgage calculator, and put the interest rate from 3.5%, where it was 6 months ago, for the loan, and then put it at 6.25%. And I don't want you to just look at the monthly payment, which is going to be whatever, probably $700, $800 more, right? That's the money coming right out of your pocket. And again, you could buy a house right now, home prices are holding up, and refinance, rates go slow 5 years from now, whatever you want to do. Dave Ramsey suggested the greatest time ever to buy a house right now. Right now, I want you to buy a house because you see prices going down. I don't agree with that. Prices could come down. I wouldn't tell everybody like this is the buying opportunity. I think you should have said that maybe a year ago. But regardless, it's an interesting call because he's like, look, that interest rate, you can refinance. There's still low supply in the market regardless. But 6.25, who the hell is going to be able to borrow at that? I mean, it was hard enough to borrow at 4% due to bank policies. I mean, they make it really freaking hard now. Now you got to put down 20% with your portfolio, your 401k down probably 35% across the board. How are you going to do that? You don't own houses. Maybe you're buying a second house. It's different. But when you have that mortgage calculator, I want you to look at the interest over the life of the loan. And you are going to die when you see those numbers. Again, just go to mortgage calculator. Don't just look at the monthly payment increase. You can be like, holy shit, that's a lot. Look over the life of how much more interest you're going to pay over a $400,000 loan, since the average price is around $500,000. So you're going to take out $400,000 on 6.25 and then look at what it is, 3.25, and look over the life of the loan, how much you pay. And that's just interest. And you are going to freak out. You're going to be like, holy shit. Now you see what higher interest rates do. Very clear about it. The Fed has to force a recession. Whether they want to call it a fucking recession or not, they have to force it. That's the only way to get out of this. We're very clear that for well over 12 months now. Well over 12 months. What's your biggest fear? Inflation. Why? It's the only thing the Fed can't spend its way out of. They have to do the opposite, take money out of the system to leverage and force a recession. But if you look at how crazy these moves are, I mean, you look at the global bond market, which is around $60 trillion, right? And put that in perspective, it's down 15.6% this year. You may say, well, that's not too bad compared to stocks. Forget about stocks. Let's compare it to past periods. Because you go back 20 years, I want to thank Jim Bianco for this research. Awesome. So we went back to the start of the year for 20 years. And this is the worst performance in 20 years over the first 6 months. Dating back again, 20 years ago. Think about this for a minute, because you might say, holy shit, that's pretty crazy. The second worst performance, remember, we're down 15.6%. The second worst performance was only down 5% in the global bond market. It's down 15.6%. Now you look at inflation, and we're looking at it from moderation or whatever. Moderation, listen, it's important for it to moderate. I'm going to put in perspective for gasoline price. So if you look at gasoline prices, they're $5. They're $5 right now, exactly $5. If inflation starts moderating, they're going to go down, $4.90, $4.75, $4.40, and go down slower. They're still really, really high, especially just looking back 6 months ago, especially looking back a year ago. But moderation provides a picture, certainty, that, hey, we're heading in the right direction, and the Fed's going to continue to raise, probably looking to get up to 3.54% now based on where yields are. But it provides that certainty, and that's important for you to understand, because right now we don't have certainty with this shit going on. Bond yields all over the place. The leveraging in crypto. All this craziness where you don't know what's going on, and the uncertainty, that's the scary part. If we had certainty, we'd hit a bottom and go up, because we're down so much on so many good names that it doesn't make sense. There's a reason why we're seeing the largest insider purchases. Again, you're not going to catch the bottom. But to buy here, if you have a 2-year time frame, probably not a bad move. You might maybe wait a little bit longer, and that's fine if you want to wait a little bit more. That's fine. I get it. Maybe you don't even want to come back into the market because you're like, holy shit, I can't take it. That's fine. Everybody's different. Everyone has different goals. But just to put things in perspective, and again, I'm not railing the Fed here. I'm not saying anything, but the last time we saw this type of inflation, everybody knows, since the 80s. We covered that on this podcast. Another time, dating back over 60 years, another time period. But both of those time periods, in order for the Fed to get a handle on it, because I've been doing a lot of research on the past, looking at where interest rates were, what the stock market did during this time, how long did it go down. I'm trying to compare it to other periods, even though it's so different. I'm trying to get it based, and I started doing a lot of research on this. But every time that they were able to control inflation, it only happened when this happened. You know what that is? When a Fed funds rate exceeded the inflation rate. Our inflation rate is over 8%. Our Fed's fund rate is 1.75%. Holy shit. The Fed better hope that inflation moderates. And that's what they were hoping for a long time. And now they're like, holy shit. If this doesn't happen, we got to get more aggressive. So expect 75. And they shouldn't say 75 next quarter. They should say, we're going to do whatever it takes. And I brought this up to 25 to 50 basis point hike. You could do that, and this is going to be longer and longer and longer drawn out, and you're going to be behind the freaking curve, and it's going to be this uncertainty. Or you could just take that freaking hammer and smash it right over your head and say, okay, we're raising by 1%. We have to get ahead of this. Get ahead of this. That provides certainty. So the Fed, now that they're looking at data, is a good sign. They're not saying, well, we're going to, 75 basis point hikes are off the table. We're not even thinking about it. Because now you look like an idiot, and I could see why they're getting, so much blowback, and it makes sense. But I love the fact that they're not being stubborn now, just like they were with transitory. It's transitory. It's transitory, trying to ease it. Get ahead of it. Control this. I mean, I don't know back then, but if social media was around, Volcker was raising rates like this, I mean, he would have been like hung on a cross. This guy's an asshole. He doesn't know what he's doing. He's crushed the markets, recession. He's responsible for deaths and hunger and this and that. Instead, he's a hero. He's a hero because he did what needed to be done, significantly raised rates, controlled inflation, and boom, what do we see? Holy shit. I mean, just sustained growth for such a long period through 87, which, by the way, the 87 market crash, people don't know this. I mean, this is the data I'm going back looking at. But the 87 market crash, the market finished that year up. I mean, we were up a ton and it crashed, and then it rebounded pretty sharply. But then 87, that was the big fallback. But look at past 87 into the early 90s, technology trend. You got to get ahead of this because there's so much innovation, brilliant companies. You need the washout. We're seeing it. That's not a bad thing.